And I was happy when Laura Lee called me and said, hey, we're going to do a session with some of our participants who have gotten the certification, which takes a lot of work and takes a lot of, revealing of personal information. So there's a lot at stake when you become an MWBE or DBE or whatever the certification is that you've secured. But then what happens? You've got this certification. How do you leverage it that to then start getting some work and having it pay off? So that's what we're here today to do, is talk to you about that. David's firm is an MBE that has leveraged its certification to secure lots of public work. So he's got invaluable information to share. So that's just a little bit of our background and on how we work. I met Laura Lee last year, as she said, and MBDI has been participating in some various forums that Interrise has been running for firms like yourself. So I appreciate, Mila and Sanjay, your sharing a little background on your business. Laura Lee told me a little bit more about just the types of businesses on the line. As I understand it, we do have some contractors, we have some manufacturers, in addition to the firms that we've mentioned, and a pretty rounded group of folks on the line. So please do, we've worked with firms of all types, particularly on the side of the KMI group, and basically small businesses operate on all the same premises. As you've seen in your classes with Interrise, you've got a whole arrangement of folks in the room with you that are very different than you. But again, we do have a laser focus in addition to that on the contractors and on firms that do require surety bonding to get on into their jobs. We also focus a lot on the professional service providers and those who need, professional liability insurance and have intellectual property is what they're offering to their clients. So that's just a little bit more of a background on us. Does anybody have any questions? Hey, David, do you want to give a little bit of background to yourself or to add anything to what I said?
Hello, everyone. You've done a good job. I would just add that to Liz's point about growth opportunities, on both companies that we are involved in, we see the issue in terms of access to capital being one of the common denominator or common factors in all industry groups with regards to growth, right? And if I understand the purpose of this conference call, everyone here is a business leader and wants to get to the next level, wants to grow the company, wants to make more money, as we do. We're a certified MBE, DBE firm as well. So I think all of us on the phone have a common ground, and with that, it's a great opportunity for discussion in terms of what the approach is and how to maximize on the certification. And I think Liz also mentioned that, from our vantage point and all the stuff that we do with the public entities, some of the, in the public arena at least, and I know not all of us is in the public arena, one of the things that we found is to lead with the product, right? Whether it's Milo that has the background as a designer or whomever else on the line, there's a reason that you guys started your business and you have a passion for what you're trying to achieve. It's not just about money, but we know it's about money, but it's about your passion as well. And what we have found in both the private world as well as the public is don't lead with I'm a certified entity, right? Is you started your business because of your passion. And then the second value is the firm that's looking to hire you. If it's for certification, that's an added benefit to hiring you. I just wanted to add that, and I'll leave it there, Liz, as we continue.
Right. Yeah, I have to agree. We've been, talking to a lot of different prime contractors or hiring agencies, and one comment that we've heard a lot, actually in particular, seems to be very in vogue over the past year, is these folks saying to us, oh my gosh, as soon as somebody walks up to me and says, oh, I'm an MBE, I roll my eyes because I'm more interested in what value they bring to me as a business owner. And then I'm very interested in hiring MWBEs, but I want to make sure that they're really good at what they do and that they're not going to make me look bad at the end of the day. So I think that's an important place to start. when you're talking about your elevator speech, as we sort of touched on at the beginning, that should be, not only can I do all this great work for you, but I'm also certified and I can help you meet your goals. And, I've worked on X, Y, and Z public projects. If you have worked on projects in the past or not, you just have to, work. I'm sure that Laura Lee and her group have worked with you on how to best present yourself in that 30 seconds that you have when you first meet somebody. So we're going to talk a little bit about some of the strategies that we teach folks in our programs, and that David and his group have used to help win these projects when they're out there, the projects that have goals. So there's two different, actually I'm going to mention three different ways that your MWBE or DBE or 8A or whatever your certification that you hold can be leveraged to get work. So first of all, you could contract directly with a public agency that has goals, right? You could be working, wherever you are with the DOT or with any other governmental agency where there are goals for participation of minority and women business owners. The second way you could do that is as a subcontractor on one of these agency jobs or government jobs, whereas the prime contractor is required also to meet MWBE subcontractor goals. One of the things we do at MBDI, and I'm bringing up these two points to make a distinction, we like to try to get folks so that they can qualify to be the prime contractor. And I'm not saying that you have to be a $100 million firm, but just to hold the prime contract with the agency. And the reason for that is that if you hold the prime contract, regardless of what the size is, you're that much closer to getting paid, right? So anybody who's worked in the public arena understands that it takes time to get paid, right? If you're doing private work, you can ask your client to fund your mobilization money to help you pay for your supplies up front. You can ask for status payments ongoing so that you're not required to have access to a lot of capital to do the work. Whereas when you're working on one of these public jobs or on a large commercial project, you are expected to have a lot of money in the bank or access to that but by means of a loan or some other method, so that you can buy all of your materials and pay your workers until you get paid yourself under the contract. So if you're working for the agency, yes, you still have to wait for that payment. But if you're a subcontractor, and especially if you're going down as a third or fourth tier subcontractor, you're waiting longer and longer to get that money, and that just makes the cost of doing business as a subcontractor or especially, those subcontractors that have to wait for 4 entities above you to get paid, you're just waiting a lot longer for your money, and that's harder to sustain as a small business owner, because we know that that's the elephant in the room, is having the money to keep things going and keep the job on track. Anybody want to add anything to that, David?
No, you're spot on. You're spot on. If we're going to talk about capital in whatever industry that you're looking at, there's a foundational issue, which is accounts receivable, right? That's your working capital, cash on hand, and lines of credit. So to Liz's point, one of the things that we've seen across all of the industries that we work on, accounts receivable in any business as part of your balance sheet is a critical component to whether it's myself or anyone on the line making a decision to finance the next job. How am I going to make payroll? How am I going to pay the lights, et cetera, et cetera? So I think that's access to capital, what we're talking about for growth is a critical component, and being first to get paid is a clear fundamental component of working capital to growth. And that's the time I just wanted to repeat, right? We see it all over the place. In some of the industries that where we evaluate the balance sheet and other financial metrics within one of our clients or prospects or our participants, the common denominator that we see across the board is AR's account receivable well past 60 days. And depending on the size of those numbers, that can cripple a company, not only drowning the company and or the ability for growth. That's it, Liz.
Okay. So again, we'd like you to have your eye on the prize of being the prime contractor, not the subcontractor. But understand that if you're just getting going, you'll probably need to be a subcontractor to start. And that said, if you are a subcontractor or if you don't have lots of cash in the bank or access to a line of credit, that's something to start working on immediately so that you can leverage your MWBE certification. So what does that mean? So we look at qualifying for a bank loan or a line of credit as being very much in line with qualifying for surety bonding, which may be needed also for a public contract. So on any sort of public contract, if the government is spending, it depends on the state, over a certain amount of money, whether it's $100,000 in some places, $200,000 in others, the firm that they're spending the money with is required to post a bond to guarantee that work is going to be completed and that the taxpayers won't lose any money. So to qualify for bonding, just like qualifying for lending, you have to show that you're a good risk, that you're worthy of a financial guarantee, because a bond is a financial guarantee. And to do that, the first thing the entity that you're looking to get a loan from or to get a bond from, they're going to look at your personal credit score. And that's a big hurdle for a lot of small business owners, and it's something that a lot of folks don't understand. And they'll say, why does it matter what my personal credit score is when I've got a corporation, I've got that corporate veil. Why does it matter what I do personally? And the reason it matters, and the reason why if you don't know your personal credit score, you really should be working on getting that immediately and seeing where you stand, is that essentially anybody who's hiring you, whether it's a commercial business or a government entity or the surety bond or whomever looking at you, they are going to make sure that you as a business owner have demonstrated responsibility in paying your bills, because at the end of the day, that can often be the best indicator as to whether or not you're going to complete your responsibilities on a public project and pay your bills on a public project. So I'd just like to sort of put that in the highlight as well, because that's something that you all should definitely, you can go to creditkarma.com. If you don't have your credit score, it's free. You don't have to give them your credit card to line up a credit report, as with most of the other entities, just to get an idea of where you're at. And the rule of thumb is basically you should have a personal credit score, and your spouse as well if you are married, of 650 or above in order to go out and secure the best terms for either bonding or for accessing capital. So that's just something that if you haven't done already, it's something that you really should go out and do and get a handle on, because credit scores can be repaired if you lie below those magic numbers. If you're up in the 800s, good for you. People are going to be knocking on your door to give you money. But if you've got to do some work, it can be done, but it does take time. So it's something that you need to get started today, in hopes, depending on how far you may be, if you have tax liens or bankruptcy on your record, what have you, it's going to take a little bit of time to work that off your record. It could take a few years or it could take a few months, depending on what the issues are. So I would say front and center, if you're looking to leverage your MWBE, get your personal credit in line. So the third area, I'm going to go back a little bit. I said that there's three areas in terms of getting contracts that you can look at. There's the public arena, prime and subcontracts, and then there's also those private companies that do public contracts. That may be companies like utilities that get federal subsidies. It may be, David, can you give me a couple other examples of entities that may be looking to satisfy goals?
It may be developers. I'm just trying to think about who's on the phone, because there's so many different industries, trying to cover it all. It may be developers. It could be rather any industry. I mean, and I don't know if you made this point, but maybe worth repeating. A bond could be requested by any entity, whether or not there's taxpayer money behind it. Because, again, the purpose of a bond, and we see this in the IT world particularly, is that they want the performance of a scope of work guaranteed. So as an example, and not to sidetrack too much, Liz, under the TCG side, we have a number of IT clients, right, that provide services, whether various services, particularly to Wall Street. And So when you're working for a bank or when you're working for Goldman Sachs and you have a, whether it's $1 million or $5 or $10 million contract, Goldman will turn around and say, I want to make sure that you can perform on this project. And not only because we want to see you perform, but if you in fact make an error that affects our system and in our ability to function, that might be an issue as well. So the bond would come into play to make sure that, God forbid, the IT firm cannot perform, that the bonding company would hire another IT firm to get it done. But on the flip side, they also would check to make sure that you're competent, and that's where, and I know, Liz, you haven't mentioned this, that's where the professional exposure comes into play. We see that quite a bit on the professional service side, where the qualifier for the small firm is both maybe a guarantee, i.e. the bond, and then the performance and or the Goldman or the private company making sure that they have enough mitigating exposure in place, i.e. professional liability or what have you, to make sure that the small firm qualifies. So qualification comes in two forms often, right? Because the client that you're pursuing is mitigating their risk, and you're looking to basically get to the next level, and you have to be prepared and qualified, prepared capital-wise and qualified from a surety and or insurance standpoint to meet your client's or prospect's qualification criteria. So Liz, sorry I sidetracked a little bit, but it just went that way.
Okay, no problem. Thank you. Segueing into bonding, so in order to qualify for lending, you have to meet those same hurdles as qualifying for bonding. So if you don't qualify for bonding right now, and you're a firm that foresees that contracts that you're going to be signing are going to require you to provide a payment of performance bond or a maintenance bond or whatever, that's something to start working for. And as you start completing your application for bonding or for a line of credit, you're going to find that a lot of that information that you had to gather to get your certification is going to be needed. So that's a good thing to know, that all that work that you did gathering the information for your certification process is not going to just be a one-shot deal that you gathered it and then you're never going to use it again. So that's a good place to start, is with that information. So once you qualify for capital, and then once you get bonding, then you're really ready to get out there and ply your trade. Now, I think I started to mention that even if the job that you are trying to bid for doesn't require bonding, okay, even if you're looking to get a subcontractor project or working underneath a threshold where a bond is required, if you can show that your firm qualifies for bonding, it's basically saying that a third-party expert, the bonding company, has reviewed my firm and found that I am capable of doing this work. So by the very notion that you're going to walk into either a prime contractor or an agency or what have you, and you can say, hi, I'm so-and-so, and I'm a bonded firm, and this is what I do. And then, by the way, I also happen to be certified, and I can help you meet your goals. Opening with the fact that you do qualify as a bonded firm, that is a good way to open, and that is a way for the person you're speaking with to understand that you have distinguished yourself from other firms that are like you, because you've proven yourself to be able to conduct the work that you say you can do, just as a side note. So the other issue also in getting ready for public work is making sure, and those of you who have bid on public work already will understand that the insurance requirements can be extremely rigorous, and quite frankly, a lot of times they're out of line with what the work that needs to be done. So it's very important for you to review what the insurance requirements are and to talk to your insurance broker and to make sure that your policies are going to cover you for what is necessary on this project. It's really quite a shame to go and bid on a project and not understand that in order to, at the end of the day, start the project, you're going to have to pay, perhaps 5 figures or a lot more money to buy the insurance that's necessary to do the work, because that expense needs to be built into your bid, the expense for any additional insurance that you may need. So one of the first things that you should look at when you're looking at these RFPs is, A, First of all, do I need a bond for this? And if you do, hopefully you've already gone down the road of looking to secure a bond, because it is a process. It's not a quick application and then you have a bond. You should start applying for bonding well before you need it. The second thing you should look at is, what kind of insurance do I need, and do I actually have the insurance that's necessary? And I would suggest that if you don't have an insurance broker who returns your calls rapidly, that you feel will explain to you what the policies mean, that will give you the kind of service that you need. You're a small business owner, but you are still their client, and they need to value your business enough to give you the respect and the time you need to make sure you've got the coverage that you need. So if you don't have somebody like that, I would suggest that you go back out in the marketplace and find somebody, because on a lot of these projects and in a lot of these industries, your insurance can be your second largest expense. With labor being the largest expense, insurance can often be right up there, and it's part of your balance sheet that you really need to pay careful attention to and to protect. And I'm going to let David step in here because he's the expert on this.
No, I think you've said it well. I'll go back to an example, though, with regards to sometimes when you look at, I'll go back to an example on an IT world where we found a MWBE trying to grow and pursuing a large contract, was capable, but then the insurance became the hurdle. The contract actually was for $500,000. The MBE was a subcontract to a $100 million firm, and the insurance requirement was pushed down from the agency to the prime to the sub, and the prime asked the MWBE for a $5 million E&O policy. And there was a discussion of, well, I only have a $500,000 contract. I'm able to get $1 million of professional liability. Why do I need $5 million? And their current agent was not able to get it, and there was so the MWBE was about to lose the contract. And from the insurance underwriter's standpoint, what they see is that this contract is upside down, meaning that there's more insurance than what the contract is requiring, and the argument that was made is, well, hey, the MWBE can cause more damage than the contract amount, which is definitely the case. But still the argument was, well, the MWBE can't obtain a $5 million limit of liability, and then secondly, it was exceedingly expensive. So that's one example what Liz talks about in terms of the MWBE had not looked at the insurance requirement, and it almost became a point where they would lose the contract. We got into the discussion, and we sort of was the arbitrage between both sides, and we were able to talk to the agency, have them do a sublimit, which ultimately came down to a $2.5 million agreement, which then we were able to procure the insurance for them, but more specifically, the MWBE went on, the prime was happy as well. But to Liz's point, all of that should have been known up front, and it could have been a case where a very profitable opportunity went out the door because somebody overlooked a very important thing, which is the requirement. So I just want to give that as an example, Liz.
Okay, thank you. Does anybody want to step in with any questions right now?
You know, this is Laura Lee. I'm kind of curious to know how many people on the line are just starting to explore contracting opportunities, or if there is anybody that's been successful in securing a contract, whether as a prime or a sub, or, you know, if you can speak to any, from personal experience, if you can speak to any of the things that Liz or David have already shared. And again,
hi guys. This is Daniel. I'm with PPV Transportation Worldwide. I didn't get a chance to introduce myself. We do premium chauffeur services and ground transportation services for Fortune 500 companies and a few minor state contracts. And I just wanted to say, I mean, we don't do any bonds. It's not required for the industry that we're on. It's just mainly, yes, just being careful at the beginning of the RFP to make sure our insurance capabilities meet their standards. But in regards to bonds, it's really not. It's more like for the construction and other industries, I would say.
Great. Thank you. And when you got those contracts before, Daniel, did you already have your certification, or is that something that you've worked on since the program?
Yes, I had my certifications before. It helped me get the contract, but I got it before the program.
Is there anybody else that either has experience securing a contract, or maybe, you know, one of your growth goals in your plan is about going after that first contract? And if, you know, you have any questions or any new considerations given what we've talked about already?
Well, this is Mila. I've had my certification for a while, but really didn't explore any of this. I just sort of used it as an adjunct to when I was talking to larger corporations and, you know, some of larger brands. I'm just now becoming aware of this, and candidly, I often wondered, because we've bid on some very large contracts, why aren't they asking me for something? And I didn't know anything about surety bonds. I'm definitely going to be looking into it going forward.
Cool. An aha moment.
Yeah.
Right, and again, it doesn't cost anything to qualify for or pre-qualify for bonding. I mean, it's your time in pulling it together. But it can be if you're in an industry. So it's construction contractors, it's also maintenance companies, cleaning companies, anybody. There's quite an array of firms who could potentially be asked to provide bonding. In fact, on the KMIC Group side, the KMIC Group has been asked to provide bonding in the past, and that's totally professional services. But essentially, if the spend is there, any sort of public spend is there, they may require bonding. And it can be a stand-in, and it might not be in the RFP, but if you see an RFP, for instance, and you're a small business that does not have audited financials, and the RFP says that it's requiring audited financials, what's happening there is the agency saying, I want to review your financials and understand that a third-party auditor has reviewed them and said that they're okay, in order to give you this contract. But if you don't have audited financials, which can be quite costly to move from, you know, compilation to review and then to audited financials, we have seen in the past, and we have posed to the entity, would you be willing to take a bond instead of audited financials? And that has been a successful tactic in the past. So that's just something to keep in the back of your mind, that even if you are, you know, professional services or an industry that doesn't generally require bonding, commercial surety bonds are out there, and it's a huge industry, and it is something that you may want to look to do if it's something that you really want to delve into. Okay, so we talked about bonding, we've talked about making sure you have the appropriate insurance, we've talked about how you'll need a line of credit to finance the work, and how that all relates back to your personal credit score. Again, I want to touch on that a little bit more because, as a lot of you have probably experienced, as a small business owner, you know, the Chases, the Citibanks of the world are often not all that terribly interested in lending to small businesses, depending on what industry you're in. Certain industries are considered more risky than others. So oftentimes you're looking at, you know, alternative lenders. You're looking at CDFIs or community development financial institutions. You're looking at SBA loans, which can be great. SBA loans are great. They're generally about 6% interest rate, but they can take a long time to process. So when you're trying to bid and move quickly, sometimes they're not really what you're looking for. So if that's something that also, in addition to bonding, if you need bonding, you should really be doing your legwork to making sure that you have the credit line or the access to capital you need to do the work. And we find that a lot of small businesses do not qualify for rates that are attractive or even affordable to do. So it's crucial that you understand your financials, and I know if you've been through an program that you've gotten a decent background on how to understand and read your financials. But it's crucial that you understand what your margins are, so that you can look at any terms that a lender may give you and make sure that the job you're doing, if you're borrowing to finance this project, you want to make sure that you're still making money, that you're not just paying the financial institution. We've had people say, they've got a line of credit, it's at 14% interest, and the like. And that's something that you really need to look closely at, because you're working to make money for you. You're not working just to do a project. So that's something to really, really look carefully at. So that's sort of a little bit of a background. And we also, after we finish, going over the bullet points of things to consider to leverage your MWBE, we'll talk about another product that can be useful to help you access affordable capital as well. The next thing I want to talk about is marketing. And if you're working with Enterprise, I'm sure you've got it, but I just want to go over it again. It's marketing your business is crucial, both you in person out in the world talking to people, but also virtual marketing and other prospects. So do you as a business, do you have your logo? Do you have your one-pager, your marketing material, sort of your marketing inventory that you can break out and share with the world in whatever way you deem appropriate, whether it's going out to events and expos for MWBEs or others? Is it email campaigns that you found successful in building your pipeline of business? But do you have that marketing material that you can pull out and dust off and utilize on a regular basis, so that every time you're doing some sort of a marketing activity, you don't have to go recreate the wheel? It's good to just have that in your inventory ready to go. So the one-pager, which is a one-page overview, maybe some testimonials, this is me, this is what my business does, this is what differentiates me from the others and why you should hire me, right there with all the contact information right on one page is really a must in your marketing repertoire. But also, do you have your business cards, and do you have a website? If you don't have a website, and a lot of small businesses don't have a website right away, you don't want to leave it to chance when somebody Googles your company and trying to decide if they should do business with you. So a very inexpensive way to get around that is to make sure that you have a Facebook page and or a LinkedIn page. So the LinkedIn page would be about you as an owner, whereas the Facebook page would be about you as a business and could also include those testimonials, pictures, etc. So the notion is, if somebody Googles you, you don't want them just to get a Manta, this is the name and address of the company. It's better to have the information that they find when they Google you to be information that you've put together, presenting your company in a way that in the way that you want to be seen. So that's just something that's really key. Also, when you're doing your website, this links back to your insurance. We've had folks who do the generic websites, which are great, but make sure that any pictures that you have in there are actually representative of what you do. So by way of example, we've had some contractors who've had rudimentary websites, and they put pictures of cranes on them and general construction pictures, and their insurance underwriter goes and looks at them and says, my gosh, these guys are working at a height. They didn't say that in their application. I'm either not going to quote them, or I'm going to cancel their insurance because they've misrepresented, whereas it was just a mistake. So that's something just to really be careful about when you are putting your marketing information out into the world. You want to make sure that you're representing actually what you do, and that anything that you put out there is something that you want people to see about your business. So that's just a little bit of overview on the marketing bit from our perspective. Any other questions? So we're running a program right now in the city of Newark, New Jersey, and I know Enterprise is running sort of a parallel program to us. But one of the things we found is we're doing one-on-ones with the firms. Some of these guys have never gone out to these marketing events. And we can understand that depending where you are, there may be many, many, many hours of MWBE events that are always being pushed at you. So there's decisions to be made, right? You don't want to spend all of your time attending marketing events when you should be, building your revenue. There's sort of that line of what is good time spent. So that's something really to look at carefully. But it is important to get out there. If there are prime contractors that you want to work with, you need to be out there shaking their hands. You want them to get to know you so that you might get that call if a job that's within your target range is out there. You want to be known. As an entrepreneur, you guys are all risk takers, and you want to not be afraid to get out there and put yourself out there. Okay. Okay, and finally, we wanted to, we had spoken with Laura Lee about this. We've got a capital management notion. It's a patented process that MBDI, the nonprofit, is licensed to use through the KMI group to help MWBEs and small businesses for affordable capital when they can't get it otherwise. So we, I don't know, David, do you want to give a little bit of an overview?
No, you can continue, and I'll chime in.
Okay, so what we do is it's a capital management program, and I don't know if any of you on the phone have been in a position, and I think as small business owners many have, where you're scrambling to pay the expenses on one project, and then you're borrowing from another project to meet the expenses on one, and then you're sweating when it comes to payday because you're having a hard time making the books balance and meeting payroll or whatever it is. So as contracting entities, they really understand that that's an issue, right? That borrowing from Peter to pay Paul is very much upfront a small business practice. And a lot of times this prevents firms from investing in working with small businesses and helping them to grow, regardless of whether or not they need their MWBE goals met. So this is a problem that we've been working very hard to try to find a solution to, and what we've come up with is something that we filed a patent for in the fall because we found that it has been quite successful. And what it is it's called CCM, and it's a methodology where we work with prime contractors. Particularly, we work with MWBs who have good relationships with a prime contractor. And the prime contractor wants to do more work with this MWBE, but understands that they don't have the capital to do more work because they like them, they know they're good at what they do, they work well with them, but they just don't have the capital. So we work with them so that the prime contractor steps up and advances funding under the contract. It goes through this CCM process where it is managed in a third-party escrow account, whereas the third-party escrow account manager winds up paying all of the expenses under the account, including payroll and all the vendors, and providing a really transparent process to assure the firm or the entity that's advancing the funding that all the money that is spent on the project goes back to the project. So that's sort of a little bit of it in a nutshell. But we found it to be very successful so far in the New York area in terms of helping MWBEs to grow beyond their current capacity. Again, the primes are incentivized to do this because they have really strict MWBE goals that they need to do if they're going to work on these projects or work for these agencies. But they're having a hard time meeting those goals. So they know they need to meet the goals, so they feel like it's a calculated business risk. On a monthly basis, they go through the schedule of values, they look at the actual expenses. It's very detailed. It's very financially driven with CPAs managing the process. And they advance the funding. I'll say it again, advance, because people don't believe it happens, and it does happen. It has been quite successful. And then the MWBE benefits from having the back office functions managed and also securing very low-cost capital because the money's being advanced, which is not a cost, and then it's a 2 or 3% expense just to have all these expenses in the back office managed by a third-party entity. The focus is on commercially useful function, which I would imagine a lot of you have heard of, or if you haven't, you will be as an MWBE. In order to be to be satisfying MWBE goals and doing so legitimately, the smaller firm, the MWBE firm, has to show that they are providing a commercially useful function under the contract. So by way of example, we talk to a lot of firms who get a phone call from a larger firm and saying, hey, I just got an opportunity to work on a $3 million project. And I say, well, what's the largest that you've done before? And they say $100,000. And I say, well, hold on a second. Do you have the capacity to do that project? It doesn't matter what kind of firm you are. Do you have the inventory? Do you have the manufacturing ability? Have you done projects like this of this size before? And usually the answer is no. So the question then becomes, why have you been asked to provide services at a level that you can't possibly do? And sometimes, and I'd almost like to say oftentimes, it's an invitation to fraud. And that's something that we're really looking, obviously, to help do away with and get legitimate growth. Because if you take a contract that you can't possibly do, and the whole idea behind it is that the prime contractor is going to sort of help you along, or maybe lend you some labor, let you use their facilities, anything like that, then you aren't, by legal definition, performing a commercially useful function. So that's something that is very important to point out, because to build your capacity, you need to make sure that you are doing so in a way that you are growing sustainably, growing in baby steps as needed until you get to the point that that you are, the size that you want to be. Essentially, you don't want to jump outside your scope. You don't want to jump outside of your capacity in your quest to grow your business. So that's something that when we're doing the capital management program, we assure that because we're just a third-party vendor to the MWBE, we are not the prime taking over the business. We are become basically an arm of the MWBE, and allows the MWBE to jump up to a level that they couldn't possibly afford without the help. So questions, or David, do you want to chime in on that?
No, you did a great job. I would just say this is a tool that we have developed for small and MWBEs to utilize to get to the next stage. As I mentioned before, access to capital is every business's issue, whether you're IBM that's looking to do an IPO, that's looking to raise money, or you're a small startup, right? We're always looking for money as businesses. So we're utilizing this as a tool to help firms grow, and when there's regulatory issues, we can provide transparency around it to show the trail of the funds, et cetera, et cetera. So it has a lot of different benefits, obviously, both to, as Liz says, to the prime, to the agencies, as well as to you guys on the phone. Frankly, I wish I could use it in our world as well, but we are the third party that does the administration, so we can't use it. But it works. It's working on a number of different industries, and it is a tool that you can utilize for discussion purposes and your marketing. And if you've done $1 million and you'd like to seek $3 million and you can't find the capital to do the payroll until you get paid, this is certainly an avenue that you might want to consider, right? Because it's providing you with the money before you even start doing the work, so you don't have to worry about the AR issue, right, that we talked about before. So again, it's a tool and it's a way for you to grow, which is what this discussion is about. This whole conference call is about. So let me put it in context, and I'll give it back to Liz. Where there's a firm that's going to look to do about $38 million in this, and there's a firm that we just picked up that is looking, their first contract was $500,000. So two different size firms. Also talking to a firm that has, is in the 20 million range, and says, okay, I've used enough of my capital to fund, these $20 million worth of backlog. Can I utilize capital management to continue to grow? The answer is yes. So again, think about various tools in your tool belt. You have access to capital via your cash on hand, via your accounts receivable, via your own credit line. Now this is an additional tool that you could utilize to grow. That's how I would think about it in terms of where can I grow my business and continue to make money. Back to you, Liz.
Can anybody share any anecdotes of how they have used their MWBE certification, or have any questions or anything they'd like to share at this point?
Hi, this is Karen. I own a writing company. We do medical writing. It's called the Med Writers, and we are pretty recently certified as a MWBE. We have not used our certification at all. We're also certified 8A, and EDWOSB, also called EdWOSB, through the federal government. And we are learning how to use this. We do not have any bonding. We're in the writing and consulting industry. I don't know if we need bonding. No clue. We recently applied to Orb Bank that we do our business banking with for a line of credit, and we're turned down. My credit score is probably about a 650 right now. So while it's not wonderful, it's not absolutely horrible. So I really don't know the right kind of route to go with this. And so this has been a great call because I'm learning so much.
Excellent. I'm glad to hear that. I would say, 650 is the opening for a credit score, so it is considered good. But most people need to keep working on their score. Actually, everybody does, because even if it's great, things can happen and change that all the time. I'd just like to mention a not-for-profit that we work with that helps folks with credit issues and can help give you a path to improve your credit score. We work with Green Path Financial Wellness, and they have credit counselors. 800. It's an 800 number call. Again, Green Path Financial Wellness. They do free counseling. Your first call would be free. They do some debt restructuring programs if that's an issue, and they have very, very nominal fees. They're basically supported by a lot of the big financial institutions. That's where they make their money. So it's not really something. We talk to a lot of people who are working on programs where they're spending, a lot of money a month to get this kind of service. But Green Path does a great job, and again, is either free or very, very inexpensive to use. Another thing that I would suggest is, again, going to creditkarma.com, because they make suggestions of ways that you could work to improve your credit score as well, and that's something that you can do independently quite quickly. But then again, the major banks often don't want to underwrite small businesses. That's tricky. The SBA can be a good place to turn, and then local, community development financial institutions, as well as, exploring alternatives like capital management that we've discussed. But thank you for sharing that with us, Karen.
Anybody else maybe that has a growth goal? Quite a few people are either graduating in the next month or so or have just very recently graduated. So do you have a specific growth goal around contracting? Maybe you've learned that there are a couple steps needed before that goal, or do you feel like you're on the right track? I'd love to hear about something from someone's growth plan.
Hi, this is Sanjay again. We have been MWBE for a while now, almost more than 6 years. And what our experience has been actually that, once you get a client or, customer, and they actually say, okay, you have to be having this certificate. We have never found any opportunity just because you are a MWBE. As you know, that MWBE is just a certificate, an extra certificate, but it's not the actual value create for the client. So I think once you have the value creation done as part of, if you have a growth plan, then I think the most important thing that we learned was, creating the value for the client, and then advantage would be to have any of those extra certificates. That has been our experience.
Great. Thanks, Sanjay.
Thank you. One more thing, I'd like to reach out to Karen again, who said she has an 8A certification and is just starting to look into how to apply these things. Please be aware that the 8A program is on a time limit, right? So because the 8A program only gives you 8 or 9 years whereby you can get these contracts, it's really important for you particularly, or anybody else with an 8A, to focus really quickly and right away on getting that capital you need so you can bid on these projects, because it can be a terrific way to make money. But I would suggest that right away, get online and start working to improve your credit score so you can get more affordable capital and move on it, because it's a great, great opportunity to grow.
Yeah, what I have been doing is contacting quite a number of contracting officers that are relevant to what I do, mostly within the Department of Health and Human Services, because we're a medical-focused writing company that we really could write for anyone. But that's, we're all doctors and chiropractors and naturopaths and stuff like that. and just letting them know, hey, I'm recently certified 8A. If you have any sole source opportunities pop up, we're eligible for sole source both through our 8A and our MWBE certification. Obviously, because of my limitations with not having access to working capital, like you said, it's that juggle. How much do we have in the bank right now is going to determine how much we can take on in terms of a contract. So obviously, the smaller the contract, the better for us just to get our feet wet, get some past performance, and be able to, build up the savings in the bank because we don't have access right now to a line of credit.
Right. Yeah, it's very, very tricky. It's a tricky balance for sure.
Yeah, it's like we would love to go after bigger contracts. We've seen contracts in the hundreds of thousands, in the millions that we certainly could perform, but we don't have the access to capital, and so we're still kind of in the tens of thousands, range in terms of what we can perform on because of our limited capital.
Right. Now, there's a couple ways to approach that as well, and I'll keep this short because I know the call's ending quickly. First of all, is going as an 8A contractor, working with the SBA on getting an SBA loan at some value. It would start small, but then build up, and also working on teaming or mentorship arrangements. As a WBE, you are attractive to larger firms because you can access projects that they can't access. You can access these 8A contracts, and you can get a mentor to work with you on such a program, on projects that would help you get the capital and get the maybe the back office you need so that you can work on larger 8A projects that you couldn't do on your own.
Thanks. That's good advice.
Yeah, that's often the way that smaller 8As really get their growth under their belt, and it's different. The commercially useful function does not apply to the 8A in the same way. The mentorship is very encouraged under 8A. You're not looking at the same issues that I spoke about when I was talking about commercially useful function before.
Great. Well, that was some incredible information. Thank you, Liz and David, so much for just sharing all of that knowledge. I feel like we covered a lot, but also just barely scratched the surface.
That's right. Well, thank you so much for the opportunity to introduce us and to let us share some of our experience and what we've done with firms around the country. And thank you so much, everybody, for signing in.
Thank you.
Thank you.
Thanks, all. And I encourage you all, too, to continue this conversation in the online forum, the Alumni Network. We can connect you to resources like Liz. So, as you're really starting to implement your plans and work towards these goals, just continue to reach out. We can connect you with other people that are maybe facing similar challenges. Because, again, this is probably just scratching the surface for a lot of you. So just continue to keep working and seeking out those resources.
I have a question. This is Karen. If I'm interested in getting more information, what's the best way to do that, Liz?
Is it okay if I share my number, Laura? Or can you email that out to folks so they can call me directly?
Sure. How about I email it to the people we are recording this, so how about I email it to the people on the call?
That would be terrific. Great.
Thanks, Liz.
All right. Thank you guys so much. Appreciate it.
All right. Have a great afternoon, everyone.
You too. Take care, everybody. Thank you.
Bye.
Thank you.